Hello, everybody, and thank you for joining us today. My name is Melanie Turek, and I am a VP of Research at Frost & Sullivan, and I will be moderating our panel discussion, which is going to be looking at how financial services firms are using big data and analytics to change the game. I'm going to start out by just going through a few housekeeping items. This will be an interactive discussion among me and our two panelists, who I will introduce in just a minute. We do, however, want to hear from you as much as possible, so please go ahead and post questions as you think of them, as they come up, or even if you just want to post commentary on some of the things we've said, that's fine too. We'd love to get you involved in the discussion. So go ahead and use your question tab in order to do that. I will be monitoring that throughout the conversation, and I'll make sure that we get those addressed as soon as we can. I do want to just go ahead and introduce our panelists really quickly so that you can get a sense of who they are and kind of the perspective that they bring. The first panelist is Ash Sadiq. And Ash, go ahead and introduce yourself if you would.
Fantastic. Thank you very much, Melanie. So my name is Ash Sadiq. I am the founder of a company called YamaPay, and we will be talking a bit more about each of our companies as well.
And then our second panelist is Brad Van Leuven. Did I pronounce that right, Brad? And go ahead and introduce yourself.
Thanks, Melanie. Just about did. So I give that 9 out of 10. So hi, everyone. I'm the VP of Partnerships and Marketing at Railsbank, based here in London.
Excellent. So, we've got Brad and Ash here to help us kind of figure out some of the ways in which firms are using big data and analytics today in order to advance their offerings, increase their revenues, improve the customer experience, and all of that good stuff. I did just want to start out at a high level talking a little bit about some of the trends that we're seeing at Frost & Sullivan in this space. The general area of big data and analytics is hopefully familiar to almost everybody, if not everybody on this call. Basically what we're talking about is collecting information regardless of where it comes from. Sometimes it's from our proprietary sources that may be within our customer support, our CRM systems. It may be part of our production and supply chain metrics, all kinds of stuff coming into our organization that might be private and proprietary, but we're kind of leveraging in terms of analytics, or it might be coming from public sources as well. So everything from social media to just general information that's out there, whether it's census information, weather information, whatever might be relevant to your business at the time. We also want to mention that the information is flowing into a lot of different sources and systems today, so that historically when we think about corporate data, very often it's structured information that's coming into an application and being used in some way. But a lot of times what we're talking about today in terms of big data is actually unstructured information. It might be coming in, again, through a Twitter feed, or an email from a customer chat, or even a voice call that's been recorded and transcribed. And then also a lot of information that may or may not be structured is coming in through kind of new sources, so things like beacons and sensors, even smartwatches, clothing, stuff like that, that's being used within the organization in one way or another, and then being funneled into our data and analytics systems. And the idea here is that we're taking all of this information, kind of getting rid of the noisy stuff, focusing in on what's going to be most relevant and useful, and then using analytics in order to better understand that information and then funnel it out to the relevant users within the organization to make sure that they can leverage that data, to make better decisions, whether that's, again, with a customer interaction or kind of in the back office for multiple different kinds of lines of business and purposes. So this is happening across, I would say, pretty much every industry and all around the world. But what's interesting is actually we just are coming out with our latest survey of close to 2,000 IT decision makers around the world. It's something that we field every year, and we ask them for information about a lot of their information technology investments and deployments. And so big data and analytics is an area of focus for us. And in this latest survey, which actually isn't even available yet for reading, but I was able to get a hold of some of that data, what we found is that financial services companies are the industry with the highest adoption of big data and analytics today at about 43%. So in other words, 43% of financial services firms are telling us that they are using today big data and analytics in some way within their organizations. And then about 2/3 of companies are expecting to increase their investments in those systems over the next 2 years. So clearly this is something that is very relevant to this particular industry, and we will get into why that is in just a bit. The other thing, though, that stood out for me in that particular survey was we asked about drivers, right? Why are companies investing in this technology? And really interesting, what the biggest driver was employee retention. So within financial services is just basically being able to keep hold of your employees, the best that you have, and making sure that you're able to retain them. That was true for about 1/3 of organizations. And then that's followed by generating revenues and increasing the customer experience, both of which, tend to be top of mind, I think, when we talk about these issues. But I thought it was really interesting that, in fact, keeping good employees was actually the top driver within this field. So with that as just kind of a high-level background, I want to jump into the discussion today and our focus on FinServ. So Ash, let me start with you. What are you seeing specifically in your world that some of these financial services firms are trying to do with big data and analytics? Does it map to the data that we found at Frost & Sullivan? Is it a little bit different?
I think it does definitely map, and from our vantage point, the most important focus for us is the customer experience, and then also going beyond that and really thinking about how much value is being driven by making use of the data analytics and what the data analytics can actually help create in terms of value. And that's really where we see companies like YamaPay and other fintech companies that are really trying to drive a lot of value from the existing data. And as the data evolves over time with the app users and the systems that they are using and some of the learning that happens as a result of that, then we come back and see a whole lot more value showing up on the front of the screen. So that's really where our own focus area is. But to your point, there's just so much more that can happen internally that will eventually also serve how much they do on the customer experience side.
And Brad, what about you? What are you seeing in terms of your own use here and some of your competitors or colleagues in the industry?
Yeah, great. It's a really interesting question, I think. So we work with both fintech and banks at Rails Bank, and so what we get to see is really the best and sometimes the worst of both worlds. If you take banks, for example, and you take a very simplistic view of a bank, you can slice a bank perhaps in 2 dimensions. You can think of it as having perhaps a revenue side and an expense side of the P&L. And obviously, we're really excited to see applications of big data and analytics on the revenue side. But really, what we see much more often in the market is applications on the expense side. And I think that's because whilst, as you've seen in your data, big data tools are in extensive use, they're still emerging. And so for a very large bank with billions and billions of dollars of market cap and revenue, an application that helps save a few basis points on the expense side of the P&L actually goes straight to the bottom line. Whereas if you look at emerging applications of big data, maybe it can drive single-digit millions of revenue in the short term, but for a P&L owner within that bank, that's not going to move the needle.
Interesting. Yeah, and I will point out just for the audience today, so, right now we're looking primarily at banks in terms of our panel, but generally at Frost & Sullivan, we kind of throw insurance into financial services, and so some of the people who responded to our survey as members of the financial services industry are within the insurance sector, if you will, within that. And one of the things we see there is looking at how insurance companies are kind of changing their actuarial tables in some ways to respond to the information that they're getting from big data and analytics. So every now and then I'll just kind of poke my head into the discussion with a little bit of information about what some of those organizations are doing here too. And I think those use cases can be a little bit different. Ash, what do you see as the lowest hanging fruit for big data and analytics in this industry? I mean, what do people usually start with when it comes to using some of this technology?
I think as Brad was saying, for a long time, our focus has been on efficiencies, and I think there's definitely a lot of opportunity in that area. I am a bit greedy as a startup founder. My focus is a lot more on how can we drive a lot more value from the data that we have about each of the customers, what they have told us, and then come back and connect the dots. I love the fact that you mentioned insurance. You mentioned insurance, you think about mortgages, you think about car loans, and once you connect the dots across all of these products and what the customer is doing, what's happening in their life, then you come back and you essentially are able to actually wow them, because a lot of these data points, it gets so hard for any human being to be able to try to draw insights out of them on their own. Even if they're working with a financial advisor, they're not seeing what the data itself can actually connect the dots across. And that's the kind of vision as well as excitement that we see when we start connecting the dots from an end user perspective, a banking customer perspective, or an insurance customer's perspective. So then we start seeing savings as a result of those things.
Yeah, so you're talking there about, perhaps a customer of a bank that's, maybe got a broad range of services, and they might have, lots of different relationships with that bank. Maybe they've got an auto loan, a mortgage, some life insurance, a checking account, but they're not necessarily able to see the connections there, and perhaps also the siloed units within a given financial institution might not, up until now, always see those connections and those relationships. And so in some ways looking at analytics to help better understand both the customer as a customer, but also as a person, and how those different needs are being met, and maybe being able to offer them different services or different products based on that. Is that what I'm understanding, what you're saying?
Absolutely, and that's really where we see the excitement, because once we think that way, it's just incredible what can come out of that thought process, because you can improve what you're offering them, and you can also come back and offer them something that makes a lot of sense, because you can then present the apples to apples comparison across a couple of loans, and then basically say, this is the existing loan that you have, and given the data that you've given us and what we've seen happening in your life, here's a much better product. So we continue to drive revenue growth, let's say as a banking institution or an insurance house, but then the benefit for that consumer is much higher, because we're connecting the dots on our own, because we have access to this data.
Right. So Brad, what are you seeing as some of that low-hanging fruit, the first things that make sense to do as a financial institution?
I think the key thing, so as I said, the motivations and the incentives within an organization is very much about driving efficiency. And what we see among our partners is very much a drive to use big data in probably all the areas that many listening in may expect. So we're seeing a lot done on areas like credit risk or fraud, certainly as well AML and working out onboarding and things like matching to sanction lists, identifying pets and so on. But the area we're really excited about, and a lot of banks seem to be driving, is how can we leverage our customer-facing support functions and augment them with the data we already have to do two things. So first of all, to scale what we have and reduce costs, but also reduce the opportunity for error and augmenting what the human is doing on the phone or on the chatbot or on the email with support from the existing data set within the business and coaching them towards the right outcomes.
Yeah, so that's really interesting. I mean, one of the things we've talked about here is, the use of analytics in customer service. Obviously, we've seen some of this develop a lot over the last several years with the increased use of bots, say, and various types of automated interactions. But banking obviously being a highly regulated industry with huge compliance and regulatory requirements. To what extent would you say that big data analytics is actually able to help the companies with those needs? So never mind, the customer side of that experience, but the business side, making sure that, what agents are doing and the information that they're working off of, and that everything that happens within an interaction, whether it's on the phone or online, is compliant, and that information then is being processed and stored and managed appropriately.
I think the key, so when we talk about big data, we often get drawn into things like machine learning and so on. And I think the key challenge that regulated entities have there is, especially on the customer support side, are around explainability. So it's great to have a human augmented with big data and the analysis of that big data, but unless in financial services you can explain why you did something, it's going to get you into more trouble than not. And so the good news is, though, there are great companies out there like Rainbird AI, which is a Techstars company that works about generating knowledge maps from customer support within regulated institutions, and then using that as a knowledge map to leverage and ramp up new support people. And so what they're able to do is not only support them in guiding them through a conversation in terms of advice or so on, but then explaining in an auditable way why it steered the discussion in that way and moved things. So there is an audit trail, and that it prevents things going off track, it prevents mistakes by people, but also it brings out the best in leveraging big data sets.
Interesting. So, Ash, I'm going to hand things over to you for this next question. So, when we're talking about data and analytics, clearly, this is something that companies, in particular, I would say financial services companies, have been doing for a very long time, even before there were computers. The idea of taking the information you have on your business, on your customers, analyzing it, and then using that information to further your interests and the customer experience is not new. But, for many, many decades, right, this was done essentially as a batch process. You had data analysts. That was their job. That was what they were trained to do. They understood how to look at that information, kind of process it as humans, and then share that with their colleagues and the C-suite and so on. What would you say, are some of the biggest changes and advantages to being able to do this in an automated way, especially, what we have available to us in 2019, which is even better, than what we had in 2018, never mind, say, 2009, right? It's just changing all the time. So how has this changed the way organizations are using information? Who is involved, say, and what kinds of processes are being affected? And I know that's a very big question, but maybe narrow in on a couple of things that you're seeing.
Yeah, absolutely. I think when we take a look at what Brad is saying around the efficiencies and how banking institutions constantly are trying to make sure that they are driving bottom line efficiency as well as top line revenue, we hope, and we, at least from the work we're doing, we're really seeing the need to think about the very last mile where a lot of the interaction happens on a mobile device, let's say with a banking product or an insurance product and so on. So what this then brings the point about what's the value that at the very end of the day that customer is going to receive, and then you back end your way into the data. And of course, to your point, there's just so much of it. So I think if we focus more on what that customer is going to get out of the insights that we're presenting in front of them, hopefully that's going to result in some next steps that will result in some revenue increase, or the fact that we can actually keep that customer. So I think to your point, a lot of financial institutions are struggling with the amount of data that they have, and some of them maybe are doing a great job driving value for that customer, which eventually will drive revenue growth for them. But the challenge still remains the fact that they have the regulations and the compliance issues that you mentioned, and then coming back and thinking about how can we extend the value that we are providing these customers. I think it remains a big challenge for them, because a lot of the time also the thought process is we're starting with the word bank, and that word means we're trying to restore value somewhere. And our thought process is a lot more about how can we actually, number one, deliver value, and then number two, multiply that value that's being received. So I think it's a huge challenge, given the amount of data, given also the mindset that we have inside banks, and then the mindset that customers have in terms of what value are you bringing over to me.
Yeah, so I mean, Brad, let's talk for a minute about the data that we're talking about and the amount of information that we could conceivably be talking about working with. How do you parse that? I mean, how do you as an organization decide what information do I want to be playing with in this particular game? And, how am I cutting out the noise, as I said, kind of at the very top of the discussion, right? How do I determine what information is going to be valuable to the organization, valuable ultimately to the customer, and what information do I need to completely ignore? And then is there information that's kind of sits in between? Maybe it's not relevant for the immediate interaction, but I want to make sure that it gets into a particular system that I'm using to look at trends or, future development, things like that.
I think this is really key, because if you think about the challenge that legacy financial institutions face, they're sitting on the back of quite a structural disadvantage in a lot of different dimensions in terms of regulation, legacy branch networks, a tech stack that dates probably to COBOL and 1959. And so they really need to look to advantages where they can draw them, and definitely the area that they have an advantage versus new entrants is in their data sets. And the question is, as you very rightly put it, if we have all these disadvantages and perhaps this one or with a few other advantages, how do we best leverage that, and what do we look for, and what is noise? The key there, I think, is going back to, what does it mean to be a product-first company? I think financial institutions in general, because of the nature of the distribution, because of the nature of a person in a branch can only keep 6 to 10 financial products in their head for them to sell, they've really not done the personalization thing. They've not done the customization. They've not thought about actually what the customer wants. And I think the key in figuring out how to best leverage that data is to think like a product-first company, to think of the customer, and really figure out how you can use the data that you have to give a much better experience. And if you can start there, then you're going to end up with great outcomes. You're going to end up with perhaps smoother onboarding journeys. You're going to definitely end up with happier customers. And what you will end up with, which I don't think just about any bank tracks, and that's a much better net promoter score.
So, I mean, to me, this then raises another question, Ash, which is, who is involved in these decisions within a financial institution? I noted that when this was just done by data analysts, they were, experts. They were tasked with this type of job. Typically they even had schooling that sort of prepared them for this, and it was just what they did. They did it every day, all day. Then they kind of fed that information to the appropriate people within an organization. But it seems to me that one of the things that big data and analytics and the technology that companies are starting to deploy around it is doing is essentially making that available to anyone within the organization to use. So what are you seeing on the ground, in terms of how companies are dealing with this? Who are they putting in charge of these initiatives? And both of you have mentioned just on this call today the need to perhaps think differently, which in my mind also means, probably crossing different lines of business or business units within the organization and making sure that, everybody's talking to the appropriate people internally, right, to make sure that they're thinking about this properly. So, who must be involved with this, and what are some of the best practices that you're seeing there?
My recommendation, which again I think there will be examples of some banking institutions that are doing a great job of that, but what I actually see, I see billions of dollars being spent on marketing messages that are very broad spectrum messages. They're not really laser focused on who that recipient is and what products they have and what could potentially be their next need in their financial life. So what that essentially creates is it really creates a trust divide between the customer and the service providers, in this case the banks. So I believe what needs to happen is the people that are in charge of the marketing experience, the messages that go out to the customer, understanding what customer needs are, and then coming back and informing the thought process internally, because I think a lot of the time the thought process is coming from what we already have, what do we have inside the organization in terms of the products that we are currently serving. But I think what we need to do is we need to step out of the building and really think and put ourselves in the shoes of that customer and what's happening in their own lives, and then come back and think about what are we offering. Because I think the conversation is still very much driven by the legacy assets that they have in terms of data, in terms of products that they are offering. And the market is continuing to change given the changes, the generational change among the customer base. And that has to inform the thought process, number one. Number two, the messages. And then number three, of course, which is a whole lot more challenging, would be the products and services that they can offer. So I think the marketing and innovation leaders within these organizations need to really adopt that outside-in mindset. That will be very critical.
Right. So, to me, that sounds like a culture change as much as anything else within the organization. And, Brad, one of the things that we see when we work with companies in this space, and not just in the financial services sector, but frankly in many others as well, is that part of this forces companies to give a little bit more authority and control, if you will, to the frontline employees. So if you're talking about somebody who is, on that front line with customers, an agent in the contact center, for example, but you might also be, talking about people within a brick and mortar bank, a teller, for example, or a loan officer who's meeting face to face with people, but also, just within some of the back office operations as well, is giving, those people, those employees, not managers, certainly not executives, a little bit more control, a little bit more leeway, if you will, to make decisions, make offers and suggestions to customers and to their colleagues, and in terms of how they shape products and stuff. Are you seeing that, and how well do you think that change is happening right now, or what is some of the pushback if you're seeing that?
I have to say that we don't directly see it because we tend to deal digitally with our banks and with our fintech customers. But when we talk to banks about this, I think what we spend a lot of time talking about is where those advantages are that I referred to the previous question. Where are those advantages that they have versus the new entrants, and how can they best exploit them? And one of the key assets that a bank has that basically no fintech challenger in the world has is their branch network. And the very last thing that a bank should want to do is to make their bank to make their branch like a walk-in website, right? So the last thing that adds value to a customer is when they walk in and the person behind the counter reads off the script, offers them a standardized product that has no relationship to the customer or their needs. What banks need to think about doing is how they can leverage that awesome branch network they have to provide a differentiated experience that can best leverage that human interaction in a way that a website, even a website augmented through big data and AI-based recommendations, in a way that even possibly cannot.
Interesting. So making sure basically that the actual face-to-face human interactions are taking advantage of the technology in a way that is designed for those human interactions. In other words, a lot of times we'll talk about this, say, in a mobile first. So maybe, translating it to that will make more sense, right, to the audience. But, when you hear mobile first, right, what you're hearing is if you develop an app for a mobile phone or a tablet, make sure that it is taking advantage of that platform as it utilizes the technology in the background. And I'm almost hearing you say you need to take like a human first or a face-to-face first approach when we're talking about the brick and mortar situation in which you're leveraging the technology, but you're doing it in the context of that actual person-to-person exchange.
Yeah, exactly. And I think a great example of that is Handelsbanken here in the UK. They're a very, very small bank with only a handful of branches. But what they've done a great job of is really empowering branch staff and branch managers to take difficult and sometimes even bespoke lending and underwriting decisions right in the branch. Their idea is that the manager knows his or her customer base and is best placed to take a decision on cases that perhaps an algorithm with a computer says no kind of approach just can't do.
Right, interesting. So it's almost like using the information to in some cases take us back to where maybe we were 40 or 50 years ago. I mean, I live in a small town where, the bank manager knows a lot of his or her customers, because they'll see each other in the supermarket, literally. And so that person has a deep understanding of, customers within their real lives and, kind of what they're dealing with in their real lives. And I think a lot of that got lost, right, over the last few decades as we've increasingly kind of digitized our interactions. And in some ways it feels like this is allowing us to bring that context back. So instead of just saying, well, we're running the numbers here and our algorithms have told us, for the last 10 or 15 years that a person in this situation, with this rating as we crunch everything, we will not give them a loan or we will, not allow them a certain interest rate or whatnot. And it's almost saying, no, let's try to personalize that data so that we are really looking at that individual and the context and understanding we have of that specific relationship, which then benefits us because maybe we get to keep their business and obviously benefits them because hopefully they get what they came to us for in the first place. Ash, can you give me an example or two of some ways in which you've seen this big data and analytics really working for companies out there?
Actually, for us, the excitement is some of the work we're doing, and I do believe that there are some fintech companies that are also coming up with some amazing improvements. Let's say on how mortgage insurance, mortgages are created and delivered for customers. A lot of people are taking very difficult processes and they're making them a whole lot easier for people to understand. From our vantage point, we looked at a lot of the financial services APIs, and we were just blown away by the data points that are available and what insights you can make once you connect the dots across an existing mortgage product and a potential replacement of that product in a refinance setting. So when we take a look at time traveling with our customers and looking at the customers and looking at the live events that are coming up, increasing the level of trust with them, the potential for coming back and offering amazing products to them, and especially the savings that can result from juxtapositioning existing products that they have with better products that they could potentially have. That's really where there's a huge potential of coming back and really delighting them, because on their own, and even if they sit with a financial services advisor, they cannot really put all of these pieces of information together to come up with an insight. And that's where, the data analytics promise is key. And I believe it's in looking at these data elements that we have and then asking the question, what kind of value can that deliver for the customer? So I think there's still a lot of promise here.
Brad, what about you? You mentioned an example of that smaller bank. Anything else that kind of strikes you or jumps out at you as a really interesting kind of almost case study or idea that is out there right now?
We've talked about banks. I think we've touched on Rainbird to augment humans in branches and decision making and support. I think another great one. There's a company out here. Actually, another Techstars company called Selvin, and what they do is they work with data sets to make recommendations for customers. So how they can look at data and say, for example, in insurance, what they're able to do is to look at a set of data about customers and predict which customers are going to churn, and then from there, what action you can take in order to try to retain them. And for the happy customers, what they're able to do is they're able to predict using other customer data what products they're likely to need or likely to be looking to buy, and therefore, what other policies can potentially insurers cross-sell. I think this is a great example of that revenue side of the P&L where big data is just starting to influence. And I think what's really interesting is, particularly in this part of the world, how that overlays, for example, with requirements around GDPR and so on.
Right. Very interesting. So we did get a question from the one member of the audience who asked, are there any kind of all-in-one or turnkey solutions, that could get a company kind of started when it comes to big data and analytics? So I'll throw that out there, and then with a sort of automatic follow-up, which is, what is required, right, if you're thinking about this or just getting started on this to really make this work? What kinds of technologies involved? Is there, in fact, are there turnkey solutions out there, or is it really an amalgam of different types of technologies? Ash, why don't you go ahead and start?
Sure. So in my mind, I don't think there is a turnkey solution. There's an amazing number of potential APIs that are available for, within a lot of financial institutions. If we look at the services Brad and Rails Bank provides the banking industry and companies similar in that direction, where you can really look at what kind of experience and value you want to deliver, and then come back and look at how the technology can serve in that direction. Because a lot of people start with where the technology is, but my recommendation is really start from those experiences that Brad was just talking about. How can you come to them with a product that's going to serve them a whole lot better into the future? And that's really where then you come back with that excitement, and then you look at your tools and you look at the data sets, and then you can say, how can I weave an experience that is going to deliver value? So it's hard work, and I know Brad probably can give you examples on that, but it's a lot of hard work when you're looking at the existing systems, the experiences the customer wants to have, and then how can you weave that together to really create value? That's a huge challenge.
Yeah, Brad, what do you think in terms of that? I mean, what are you seeing companies having success with as they jump into this, either from a technology point of view or, from a change management point of view? Who needs to be involved? Who needs to be taking ownership? Maybe what are some of the key things that get missed sometimes or dropped, at the initial stage of the process, which you wish later on that you had been paying attention to at the beginning?
I think I don't think there is a turnkey solution, but I think there are two things that together can be a massive solution for certainly for financial institutions, but certainly even probably more broadly than that. I think number one, I think it's about creating the infrastructure to get data across the organization. I think what's really interesting is where you allow people to ask questions and then go seek answers and test hypotheses with that data. I think the key is enabling a whole organization to experiment with these things and hypothesize and move forward, and rather than keeping not only the data in the silos but the people that have the right to look at it. It's really the people that engage with customers that are most likely to be able to pose the right questions in order to move this forward. As for the second component, I think maybe let me tell you a very, very quick story. About a month ago, I was out in Singapore working with the region's fastest growing life insurer. And it was a 3-day workshop. Actually, it was an internal hackathon where they were looking to use a bunch of technologies, including Railsbank's APIs, to actually launch a banking product off an insurance license. And we implemented a lot of different great things. And at the end of the 3 days, we were all in a room, very generously provided by MasterCard at their regional headquarters there. And we did a product demo. So the engineers from the company demoed what we'd supported them in building in just 3 days. It was a full mobile banking application, end-to-end, real-time notifications, real-time transactions, lots of clever tech in there, including some things that involved big data. Having seen that work in just 3 days, the chairman of the company, who was there along with the entire executive group of this business, stood in front of everyone and said in a particularly gruff way that, look, guys, you've seen this work now. This is the direction of our company. This is the future of our business. And if you're not behind it, if you are uncomfortable, there's the door. We do not want anybody slowing this down. We don't want anybody not supporting this very vocally within the organization. It's your responsibility to lead. And I want you to tell your team members the same thing. Go leave now if you're not behind this change. And I think that was strong and maybe not the way every organization should take it, but for me, the thing is clear, right? Like this is a fundamental change in the DNA of organizations, just like innovation is more broadly, and it really has to start from the top, and it has to come with a very, very clear direction of the organization that this is the way we're going. You cannot have people within the organization slowing it down because they're uncomfortable. It's time to get behind this and to move forward.
Yeah, very good. So I just want to let our audience know I have one more question that I'm going to throw out to the panel. If you have any questions or comments you'd like to make, please go ahead and do so now. We would love to hear from you. But we did get one come in that I want to make sure we address, and that is kind of what's next, right? So for companies that are logged in here, that are in that 43% that I mentioned earlier of businesses that are already doing this, what are some of the cool things that you're thinking are going to happen over the next, 1 to 5 years even, that companies are going to be able to do by leveraging big data and analytics? Ash, why don't you start?
So my recommendation to people listening in, I think the chance now exists for a lot of financial services companies to actually grab a hold of some of their customers and literally do a gallery walk, visualize a room where on the walls there are data sets about those customers, and walk with the customer and ask questions around how can we connect the dots across some of these data pieces that we have about you. What are you thinking next year, 5 years, 10 years from now? Who else is in the household? Do you have a daughter that's going to college? Are you thinking about buying a home? Are you thinking about buying a second home? What's going on for you in your own life? And use that gallery walk and that thought process of how they are trying to really make decisions. They're thinking about their future. They're looking at what they currently have, insurances, life insurance, home insurance, car insurance, and what are they thinking? And use that collective mindset versus really using a mindset that's on the inside which is the financial services company, and then the customer's mindset. I think we just need to come together in one place and start thinking together. And that gallery walk thought process, collectively, we then are leveraging the people that have access to the data, they have the tools and the technologies, and the people that are constantly thinking about how does this, at the very end of the day, really help me live my life better, have a whole lot more peace of mind, and also have certainty and peace around what's coming down the line in the future. So that's where the thought process is going to be phenomenal when we start thinking that way. And as we were just hearing Brad's story, this whole idea of being able in 3 days to take a look at what that experience might look like, it may then bring up something that energizes everybody about what that vision is.
Mm-hmm. Brad, what about you? Last thought on what we might see companies being able to do in the next several years with this type of technology?
Yeah, sure. I think what we're seeing across the board with financial services, both here in Europe and in the States, is that the barriers to entry, both for new products and for new entrants, are absolutely collapsing. We've got new licenses that are coming in, new structures to get products to market, and new technology stacks that make it a lot easier to design and launch and then iterate on financial products. And I think what's interesting about this is if the barriers are collapsing, what we're actually doing is fundamentally changing the maths of financial products. We can go from a world where we have to make mass market financial products, basically one size fits no one, and being just broadly acceptable to the lowest common denominator, to really coming up with very, very, very small niche products that serve a customer or a small group of customers extremely well, but not only extremely well, but actually profitably. I think it's key right now for financial institutions right around the world to ask themselves the question, how can we position ourselves for this paradigm shift, and how can we use the data that we have to figure out what those products should be and to get a jump on competition.
Great. Well, with that inspiring thought, we'll leave the audience there. Thank you, everybody, for tuning in, and thank you so much for all of your questions. They were great. If you do have any others, feel free to follow up with that. Also, please note that there is an attachments and links section on your screen, so if you want to visit there, you will hopefully find some interesting content that you can grab as well. And we do always encourage you to please give us your feedback on this event. You can do that from your tab also. So with that, I would like to thank Brad and Ash and all of you for joining us today again. And until next time, this is Melanie Turek signing off.
Thank you.